Welcome back. Time now for business news, and for that I'm joined on set by Stephen Carroll. Hello there, Stephen. So we'll start here in France, and the bad news from tyre manufacturer Goodyear.
Yeah, that's right. On Thursday they announced they're closing one of their plants in northern France in Amiens. Up to 1,200 jobs going to go as part of that move. It's just the latest of a series of factory closures here in France. Unemployment still a big problem for the government at over 10%, and they're going to have to look at how the cost of paying people unemployment benefit may have to change to balance the budgets. Katerina Vitazzi has that story.
In a few lines, the result of a 5-year battle. Their factory shut, more than 1,000 jobs cut. These workers can't believe it.
I'm a bit gobsmacked about it all.
Unions here have pledged to fight on. But for the US tyre maker, it's the end of the road. The Goodyear plant posted a €61 million loss in 2011. Managers say they have no other choice but to close.
For 5 years, we have tried everything to find the best possible outcome, as is our responsibility as an employer. But all our offers have been systematically refused by the unions.
So what next for Amiens workers and their families? It might be cold comfort to know that currently France's unemployment benefits outstrip many of its EU peers. Job seekers here can receive up to 67% of their former wages for the first year, more than Germany, Italy and double that of the UK. To qualify, workers need to have been employed for just 4 months. In Germany and Italy, it's a year. And they can be eligible for that level of benefits for up to 2 years, quadruple the length of UK job seekers. Generous, yes. Sustainable, well, maybe not. France's unemployment system is set to post a €5 billion deficit this year, a huge sum for a government trying to balance its books. It'll meet with employers' groups this spring to try and tackle this cash black hole in the welfare state that supports more than 3 million people out of work.
All right, you're taking us to China now, Stephen, and there have been signs of a slowdown in its manufacturing sector.
That's right. These are the latest figures on growth in the manufacturing sector in China. It's called the Purchasing Managers Index. 50.4 is the number for January. What's important about that is it is above 50, which means the sector is still growing, but it's slightly below the rate we got in December. To show the slight of a slowdown there, there have been plenty of warnings about Japan's economy slowing down. Its growth fell to 7.8% in 2012. These figures aren't causing too much concern, though, because there's another survey on the same lines, actually from HSBC, which puts this manufacturing sector growth at a 2-year high.
All right, and how are the markets reacting to that?
Well, over on Wall Street, mixed jobs news actually caused the biggest change to markets there. The Dow Jones index closed down, but did actually have its best January since 1994, gaining 5.8% for the month. Similar good news for the S&P 500, finished the month 5% higher, its best year since 1997. Now, the figures from China we were just talking about didn't inspire the major indexes in Asia today in trading. No huge gains there, although the Nikkei doing well with a continuing slide of the yen against the dollar. And just some results coming into us from Japan in the last hour. The electronics manufacturer Sharp posted an operating loss of $399 million for the last 3 months of 2012, down from $1.8 billion, so cutting their losses there. Not great news from Panasonic either. They posted a $6.7 billion loss for the last quarter of 2012.
OK, thank you. Well, workers at the Algerian gas plant, where dozens of hostages were killed last month, are hoping to get back to work in the coming weeks. 38 of the employees at the In Amenas site were killed after Islamist rebels took hundreds of hostages there. Well, the plant is hugely important for Algeria's economy, so getting it up and running again is a priority. Luke Brown reports.
A heavy security presence on the outskirts of the In Amenas site. 2 weeks on from the hostage siege, the buildings are still scarred by the attack. On Thursday, the site's director outlined the timetable until it's operational again. 3 months for foreign technicians, but Algerian workers will be back in 4 weeks' time.
This is something that hasn't just affected us, but has affected the entire world. We all condemn this criminal and cowardly act at the gas facility in Tigan-Turin.
There is some urgency. The In Amenas plant generated $14 million a day and about 12% of the national output of gas. Oil and gas production is at the heart of the Algerian economy. That's why the In Amenas site was already heavily protected. A ring of army and paramilitary forces on the outside and private security contractors on the inside were thought to make it virtually invulnerable. Now Algeria has to reassure international partners that the industry, representing 95% of exports, is not under threat. For France's foreign ministry, though, Algeria's vast desert areas where the hydrocarbon resources are located is still high risk.
We've graded all of central Algeria as a red zone. That means we're formally telling French citizens to avoid it, except for companies that have no other choice but to work in that area. We are in discussions with those businesses about what measures to take. For large French companies, that can go as far as getting their security plan validated by the French state.
France isn't the only Western nation taking steps. The UK's Prime Minister David Cameron was in Algeria earlier this week, agreeing to a new security and intelligence partnership with the Algerian authorities.
A quick look now at some of the day's other business news, and the US authorities have moved to block a takeover of the Mexican brewers of Corona beer by the makers of Budweiser. The Belgian-American brewing giant AB InBev has offered $20.1 billion to buy Grupo Modelo, but the US Justice Department has filed a lawsuit to stop the deal over fears it could lead to higher beer prices for the American consumer.
The French luxury group LVMH has reported record sales for 2012. The owner of brands including Louis Vuitton and Christian Dior said sales rose 19%. LVMH continued to grow in Asia despite warnings from other luxury brands of a slowdown. The biggest growth was in jewellery and watch sales, particularly from its Bulgari brand.
And Airbus says it will have time to adapt to any ruling on the batteries which have grounded to Boeing's 787 Dreamliner. The aerospace giant plans to use the same lithium-ion cells as the Dreamliner on its A350 model. Airbus has publicly supported its rival over its problems with the Dreamliner after a series of incidents led to American authorities ordering the passenger jets be grounded. But the company said it studied alternatives in case the batteries are found to be the source of the problems.
All right, well, when Samsung surpassed Apple as the world's biggest smartphone maker, this obviously was a big milestone. Now there are signs it could be overtaking it in terms of the tablet market too.
Yeah, that's right. This is data from the American research firm IDC. They've been looking at the sales of tablets from different forms of the market and seeing how much of that very valuable market they hold. And they say that Samsung actually doubled its share of the tablet market in the last 3 months of 2012, up to 15.1%. They sold 7.9 million tablets during that period. Now, there's still a long way off. Apple are by far still the market leaders in this area. But their share actually fell during the same period from 52% to 44%. Samsung will be keen to snap on the heels of Apple, though, after surpassing them in the smartphone market.
And finally to the UK, Stephen, employees of the music and DVD retailer firm HMV, they've been taking revenge for loss of jobs in a rather unique way. Yeah, that's right. Just like Virgin Megastore here in France and plenty of other companies, HMV suffered from the move towards online purchases of music, DVDs, films. The company's currently administration in the UK and Ireland. There's 223 stores expected to close as part of that deal. That, of course, means job losses. And what happened on Thursday is a number of employees were gathered together to be told they were losing their jobs. They managed to hack into HMV's official Twitter account. There were some of the tweets they came through with what they had been happening as they were being tweeted. They used the hashtag HMV X Factor firing as reference to the reality TV show there, saying that they were losing their jobs as they were tweeting it. They also explained their actions by saying they felt the company that they love had been let down and they had no choice but to protest in this way. The tweets have since been deleted from the account, though. It's a unique way to take revenge, isn't it? So thank you very much, Stephen. Stephen Carroll there with Business. Stay tuned, Cyril Vanier coming up with more news and headlines.